This one stock can change early buyers' lives. My research suggests it's a good idea to buy as much as possible before November 26th. It's not financial advice, but the ticker is ILMN, Illumina. It's a healthcare DNA sequencing company. And China recently removed an export ban on their instruments. So whether they're shipping the instruments into China or out of China, they're basically opening up their market significantly. We'll go into exactly how that ban improves their prospects. The company is also in the healthcare sector. So the healthcare ETF notably up today, even as the market is down a lot. Nvidia got hit, AMD got hit, all the big companies, Tesla down the most. And it's wise to take a look at stocks that are in where the money is rotating. So that's where ILMN is interesting. They did beat analysts' expectations on earnings per share, and they have 97% institutional ownership, which is very significant for a healthcare biotech medical instruments company. It really matters for those type of companies to have high institutional ownership. Let's take a jump into what these guys do.
This is Sam Putnam.
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 So this is Illumina. This is their export ban lifted partially. So the instruments are being exported to China, and China is a huge market. Okay, so it's a big deal. There's still regulatory risk present, as there always is with medical device companies or healthcare companies in general. And this is that earnings per share that beat the estimated earnings per share, exceeded expectation. They also raised guidance for full year 2025. And of course, they're getting into the AI, life science discovery. I'm not sure exactly this is drug discovery or what. This is what the company does. DNA sequencing, array-based. That's array, not assay. So I do think this is like a dry lab type of company. I could be wrong. They're so big, they probably do both. But what I do know is the people who really know about healthcare or about medical instruments bought this company. This is a significant institutional ownership, 97%. And it's nice to see that type of institutional ownership. There's another company I was just looking at, Grail, GRAL. And you can see, it's just a younger company, 60% institutional ownership. So it's just a nice vote of confidence to literally see institutions buying the stock. So this is the recent earnings. There's that beat. And holding up this little drop is, a little drop, but this is the XLV ETF. So a little down as well. But in general, this is almost negligible. This is almost negligible. When we look at the stocks I mentioned earlier, Nvidia, AMD down a bit. And then, of course, Tesla down the worst. Big selling there. So if you look across the market, Intel pulling back to that moving average as well. It's been a lot of moves down. And some stocks didn't have great earnings reactions, Netflix, but they were able to recover some. Meta, the idea was that buy the dip might be happening, but as is often the case, you just can't guess when the dip is going to come. Holding up, some of these earnings reactions are solid, but you have to again think about what sector you want to be buying. So the Real is in luxury retail reselling, so it's still a solid company. I've mentioned it yesterday, but now that we have new information about the move down today and the market move down, which of course the QQQ being a significant move for that. If we look at the equal weighted index, down as well. And really what we saw was the equal weighted index has basically gone sideways, and all the growth has been in the tech companies, QQQ. That's what's going up. And right now, it's really tough to buy the tech companies. There just isn't a super easy spot to do it. So you can keep looking for opportunities. I mean, SoFi selling off, right? Failing that breakout. So you have to look elsewhere. And I think these healthcare companies, ILMN, being one of the best ideas. GRL, good too, just a little bit of a younger company. So definitely offering a good opportunity. And I do think that high volume close, this was after hours, so you want to wait for the full close, 124. If you can buy it over that level, that's really solid right here. So good to keep on the watch list. And a little bit more about Illumina. Do want to keep an eye on these other tickers, 10x Genomics, TXG, and Thermo Fisher is maybe the biggest one to take a look at. Not doing quite as well today, but definitely moving strongly up since October for the last couple of months. So keep an eye on that before you take a look at Illumina. And then Pacific Biosciences and 10x, you can take a look at that as well. PAC-B is a bigger one. This is not good at all, but the miss is a little bit less than expected, so holding up. I have to think that when you look at these companies in aggregate, they're mainly going up. So that's definitely indicated by this ETF. And when you're looking at an ETF like this, the easiest stocks to buy are the ones that had solid earnings recently. So that's kind of how it works. That's how Illumina sticks out. And I think this idea is solid. So if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Not financial advice, but I hope it helps.